Welcome to The Explainer. I am so thrilled to have you here today because we're breaking down one of the most highly anticipated financial events of the entire season, Eli Lilly's massive Q2 2026 earnings report. Our goal today is to really uncover the actual mechanics behind those explosive numbers you've been seeing in all the headlines. Today, we're taking a headline-to-horizon approach. We'll be covering the Q2 earnings explosion, the dominance of Mounjaro and Zepbound, the future pipeline, Wall Street's reaction, and finally, the risks to consider. All right, let's jump right into Section 1, the Q2 earnings explosion. To put it simply, Eli Lilly delivered a staggering 48% jump in year-over-year revenue. We're talking nearly $23 billion generated in a single 3-month quarter. In the world of massive, century-old pharmaceutical companies, seeing nearly 50% growth on a multi-billion-dollar base is practically unheard of. Honestly, it's the kind of growth you usually only see in scrappy tech startups. And these massive beats, they happen totally across the board. Take a look at the adjusted earnings per share, which is essentially the company's profit divided by its shares. It came in at $8.38, completely crushing the estimate of just $6.01. But here's what makes that even more impressive. Those numbers actually absorbed over $3 per share in research and development costs from recent deals. So the underlying business performance is substantially stronger than even these glowing headlines suggest. The momentum here is so fierce that management is doubling down. CEO David Ricks explicitly cited their ongoing momentum when they significantly raised full-year guidance for both the top and bottom lines. They bumped revenue expectations up to a staggering $85 to $87 billion range. They aren't just coasting on a good quarter here, they are signaling massive confidence for the rest of the year. Moving right along to Section 2, Mounjaro and Zepbound dominate. These two crown jewels, Mounjaro and Zepbound, combined for nearly $15 billion in a single quarter. Just let that sink in for a second. Mounjaro pulled in just shy of $10 billion, which is up 91% year over year, and Zepbound added nearly $5 billion. Combined, that is literally more revenue than many large, well-known pharmaceutical companies generate in an entire calendar year. Now, what's really fascinating here is the inverse relationship taking place. Lilly is deliberately prioritizing aggressive market share and volume growth, which surged an incredible 60%, over maximizing price, which actually dropped 13%. Why do this? Well, this strategy is heavily driven by international expansion. For example, Mounjaro recently joined China's national reimbursement formulary for type 2 diabetes. So while prices outside the US dropped, volumes soared an amazing 113%. They're essentially trading immediate margins for massive global market share. And beyond the famous injections, they just launched Foundayo. This is an absolute game changer simply because it's a pill. Now, sure, its $98 million in Q2 sales slightly missed Wall Street estimates, but its unmatched convenience is the real story. Think about it. You can take it anytime without those strict food or water restrictions that usually plague oral options. It just launched in April, but it's already showing really strong prescription uptake. Okay, let's look ahead to Section 3, Retatrutide and the future pipeline. We can neatly organize Lilly's future catalysts into 3 distinct buckets. Their next-generation obesity drugs to maintain dominance, breakthrough oncology treatments like olomorasib for pancreatic cancer, and a massive, somewhat unexpected new leap into mental health therapies. Taking a closer look at the obesity pipeline, we have Retatrutide. This is Lilly's triple G agonist, meaning it targets 3 different metabolic hormones at once instead of just 1 or 2. It actually just completed phase 3 trials and is slated for an FDA biologics license application submission in early 2027. Early data suggests this 3-pronged approach could be even more effective than Mounjaro. It's developments exactly like this that led CEO David Ricks to boldly state that Lilly's future has never been brighter. And shifting gears to mental health, immediately after the quarter closed, Lilly made some huge waves. In a pretty surprising move for a traditional pharma giant, they announced a $2.8 billion acquisition of a clinical-stage psychedelic medicine company called Beckley. This is a super bold push into psychedelics for treatment-resistant depression, and it really signals Lilly's intent to lead in this highly unconventional but rapidly emerging space. This major pivot was supported by a massive Q2 biotech buying spree across multiple companies. But perhaps most critical corporate move overall is a $4.5 billion commitment to expand manufacturing right in Indiana. You see, supply constraints have been the biggest bottleneck for GLP-1 drugs, which is the class of medications that Mounjaro belongs to. By pouring billions into domestic manufacturing capacity, Lilly is making absolutely sure that when global demand hits, they actually have the product to sell. Which brings us to Section 4, Wall Street's bullish reaction. So how are the pros reacting? Well, it is overwhelmingly positive. Out of 28 S&P analysts, the consensus is a resounding buy, with a $1,277 average price target. That represents roughly a 14.5% upside from current levels. Top-tier analysts are incredibly bullish right now. Barclays points as high as $1,400, and retail platforms are reflecting a strong buy consensus. Right now, the street absolutely loves the story Lilly is telling. But we can't ignore the other side of the coin. Section 5, Risks Behind the Hype. Investors absolutely must carefully weigh 4 key risks here. First, intense competition from Novo Nordisk, who is certainly not standing still in the weight loss space. Second, an elevated valuation, trading at roughly 40 times earnings, meaning the stock is priced very expensively compared to the actual profits it brings in today. Third, there is increasing political pressure to lower drug prices globally. And finally, you have the daunting execution risk of successfully integrating so many diverse new companies, especially those in novel spaces like psychedelics, into their traditional ecosystem. Which leaves us with this final, really essential question for you to ponder. With the stock commanding such an expensive valuation multiplier, is every bit of good news, every pipeline breakthrough, and every ounce of future growth already priced in? At these towering levels, think about how a single regulatory setback or supply chain hiccup could impact a stock that is priced for absolute perfection. Is there any room left for error? Thanks so much for joining us for this explainer, and we will see you next time.